Tom Cohn, the appetite for alternatives or private market assets is certainly increasing. So how is Cerity Partners advising clients to help add alternatives to their portfolios?
Yeah, the key consideration here is for many years, private wealth clients didn't have the access to private markets. This was reserved for large institutions, large family offices, and now with the product proliferation that you see in the marketplace, there are more ways to get access to really high quality managers and strategies within the private markets for private wealth clients. We don't see that trend abating anytime soon.
And what about putting private market assets, alternatives, whatever you want to call them, in retirement accounts? Because that's where most Americans have the bulk of their assets.
Yeah, I think for now, there's such a focus on taxable accounts. And because when you look at the allocation of large institutions or even small institutions relative to high net worth clients, there's still a huge gap. So that gap is closing, but it's closing rather slowly. So I think before we even get to the question of retirement accounts and ERISA, you're going to see the increase in allocation in taxable accounts.
And how should investors, in your view, get into alternatives? Should they buy interval funds? Should they buy PE stocks? How should they do it?
Yeah, in our opinion, the one thing you want to focus in on is having access to high quality managers across all the different asset classes. So when you think about private markets, we define that as private equity, venture capital, private credit, and real assets, which includes real estate, infrastructure, and energy and gas. And you think about the structure, it's going to depend one on the asset class and then two on the client. So for larger clients that have the appetite and willingness to take on more liquidity risk, those drawdowns can make more sense. For clients that are on the smaller end, those evergreen structures are going to be more appropriate and a way to get diversified exposure without exposing themselves to K1s or a myriad of capital calls.
How do you see interest rates, should they rise higher, impacting alternative investments?
Yeah, well, I think there are two ways to potentially mitigate that or tailor the portfolio to deal with that. One is floating rate debt. And you look at a lot of the direct lending that's out there that's tied to a floating rate. So you get a higher yield or higher income as interest rates go up. The other way to think about that and where we're allocating portfolios is into the infrastructure investment. So generally higher interest rates could be followed with higher inflation. One potential way to hedge that is to have exposure to things that aren't stocks and aren't bonds. Infrastructure is a great way to play that investment.
And how does Cerity Partners introduce clients to alternatives different from everyone else? Because after 2022, when both stocks and bonds fell, everyone was getting into alternatives. So it's a popular theme right now. So how do you do it different from everyone else? And also, what inning are we in? Because everyone's getting in, so if there's a rush to get out, that may be a problem.
Well, I think the way to deal with both of that is you have to take a long-term view. So when you think about private equity, you think about private credit, even private real estate, there's illiquidity in there, and there's illiquidity for a reason. These are assets that you can't go sell overnight like a individual large cap stock in the S&P 500. And so really, it has to start with the education from the advisor to the client that you're going to hold this for 5, 10, 15 years. And if you can have that time frame and that matches with the preferences and the goals of clients, then you don't get into this idea of a rush for the exit just because there's some headline risk.
And then finally, so is that how Cerity Partners approaches the space?
Yeah, a ton of advisor education mixed with really high quality research. So at Cerity Partners, we have 12 people devoted to just going and finding the best new manager out there across those different asset classes. Those people also serve as really an education platform for our advisors and clients to make sure they really know what they're investing in.
All right, well, thanks for coming on and talking about it.
Thanks so much, Greg. Appreciate it.